Welcome to the Deep Dive, where we cut through the noise and get straight to the insights that truly matter. Today, we're powering up our discussion on one of the most, astonishing transformations happening globally. India's incredibly rapid renewable energy transition. It's a massive shift, really shaping the country. And at the heart of it are companies not just constructing power plants, but quite literally building what one source calls a cleaner tomorrow.
And to truly understand how this ambitious vision is translating into tangible progress, on the ground,
Yeah.
we're taking a deep dive into KPI Green Energy Ltd. They're a significant player in India's sustainable future, definitely. And their recent performance offers a fantastic detailed window into both their own strategic moves and the broader industry's trajectory.
Absolutely. For this deep dive, our source material comes directly from KPI Green Energy's Q1 FY26 earnings conference call. We've tapped into insights from key management figures, folks like their whole-time director, the group's CEO, CFO, alongside, the sharp observations and questions from analysts and investors.
Yeah, a good mix. Our mission for you today is clear. We're going to unpack the most important updates on their core business segments. We'll try to understand the critical industry outlook shaping their decisions, gaze into their frankly, incredibly ambitious future plans, and, crucially, shine a light on the key risks they face and how they strategically manage those challenges.
Okay, let's unpack this. How exactly is this cleaner tomorrow taking shape? And what does it look like inside a company making it happen? Let's maybe start with the financials. KPI Green Energy has just wrapped up, another record-breaking quarter, their fifth consecutive highest ever revenue. That's quite a streak.
It really is. And what's fascinating here isn't just the numbers themselves, but what they kind of signify for the broader market. In Q1 FY26, their total revenue soared to INR 614 crore. That's a massive 75% growth year over year.
75%. Wow.
Yeah. And EBITDA, that's earnings before interest, taxes, depreciation, amortization. Basically, operational profitability wasn't far behind. It hit INR 217 crore, up 64%. Profit after tax grew 68% to INR 111 crore. And maybe even more impressively, their cash profits surged 92% year on year, hitting INR 163 crore.
Wow. Those aren't just strong numbers. That 75% revenue growth is a really powerful signal. What do you attribute this kind of, consistent, robust performance to? Is this just KPI, or is it saying something bigger about India's renewable sector?
That's a great question. I mean, it definitely speaks volumes about KPI's disciplined execution and the trust they've built, but it's also highly indicative of the accelerating pace of India's renewable sector overall. This kind of growth, it sort of defies some of the global economic headwinds, right? It really validates the strategic shift towards clean energy. Management specifically highlighted strong execution and expansion across both their IP, that's independent power producer, and their CPV, captive power producer segments. And regarding profitability, they're currently seeing CAT-T margins profit after tax around 16–17%. Their aim is to sustain these within a very healthy 15–20% range. That's largely because of the high EBITDA contribution from their IP portfolio. That accounts for like 85–90% of their operational profit.
Right, so that IP portfolio really acts as an anchor for their profitability then. Makes sense. But these strong financials aren't just about looking back, they're the fuel for something much bigger, presumably. What strategic projects are actually underpinning this growth? Where are they channeling this capital?
Exactly. And when we connect this to the bigger picture, the foundation is squarely in their strategic project execution. Right now, they have three major IPP projects under execution. We're talking substantial scale here. There's a 250 mW solar project, which is actually 350 mW on the DC side for higher output. Then a massive 370 mW hybrid project, that's solar and wind, or 679 mW DC. And finally, a 150 mW standalone wind project.
A 370 mW hybrid project. That sounds enormous. What kind of overall scale are we talking about for just these three projects, and how quickly are they moving?
Well, these three alone represent a total execution size of INR 5,000 crore. That's a significant capital commitment.
5,000 crore.
Okay.
Yeah.
The target completion for the solar and hybrid ones is September 2026. And crucially, it's planned in a phased manner. This phased approach is key because it lets them start part commissioning and recognizing revenue within the next few quarters.
Ah, so they get cash flow earlier.
Exactly. Early monetization. Vital for a company growing this fast. And what's even better is that these projects are backed by 25-year long-term power purchase agreements, PPAs. They're signed with GUVNL, Gujarat Urja Vikas Nigam Limited, which, for listeners, is seen as one of the best paymasters, a top A-rated Discom power distribution company in India.
Right.
So that ensures a stable, almost annuity-like income stream for decades.
That long-term PPA with a top-rated utility, yeah, that certainly de-risks a lot of the future revenue, provides a strong backbone. Beyond these specific power plants, I noticed they've also been quite active on the strategic development front, forging alliances, looking at the next big things. Like they got that letter of intent from QL for the 150 millidu wind project. What other partnerships are they building?
Precisely. This really highlights their foresight, I think. A significant development is the three strategic MOUs, Memorandums of Understanding, they signed with Delta Electronics India. These MOUs focus on battery energy storage systems, BES green hydrogen, and EV charging infrastructure, including advanced solar EV inverters.
Okay, so BES, green hydrogen, EV charging, the hot topics.
Exactly. And these alliances are critical because they combine Delta's global tech leadership with KPI's proven local execution capability. It's a smart move, right? Delivering next-gen solutions without trying to reinvent the wheel entirely in-house.
Yeah, combining global tech with local execution, especially in these emerging areas, makes a lot of sense. So where does all this activity put them now in terms of overall capacity, pipeline, their, grand vision?
Okay, so as of June 30, 2025, KPI Green Energy has an installed and upcoming IP capacity of 1.7 GW, then CPP capacity over 2.3 GW. That brings their total cumulative portfolio to a substantial 4 GW.
4 gigawatts already in the pipeline or running.
Right. And to support this, they have that extensive land bank, 6,275 acres. That's huge. And power evacuation capacity over 3.2 GW. Their orders in hand are impressive too, exceeding 3 GW. Looking forward, they have this incredibly ambitious long-term target, a 10 GW portfolio.
10 gigawatts. That's colossal.
It is. And what's notable is their planned revenue mix for that, 25% from IP, 75% from CPP. It signals a strategic focus, maybe slightly shifting emphasis over time, although CPP remains dominant.
Interesting mix. And drilling down into that BASS venture battery energy storage, how are they approaching that? It sounds capital intensive. The sources mentioned their subsidiary, Sunrop and GI Private Limited, is key here.
That's where the strategic financial planning comes in, yeah. Sunrop is specifically tasked with focusing on smaller projects, say 0-35 mid-altitude range, and critically, BS. Base projects are absolutely essential for grid stability, right? As more renewables come online, you need storage. Sunrop has an aggressive target. Bid for INR 3,000 to 4,000 crore in best tenders across states like Maharashtra, Gujarat, Rajasthan, Andhra Pradesh. Execution timelines are typically 18-24 months. Okay. And these BS projects often operate on a BO model, build, own, operate. Require significant upfront capital. This is precisely why Sunrop is planning an IPO, an initial public offering, to raise the necessary funds.
Oh, okay. So the IPO specifically funds the BSS push. Clever.
Exactly. It lets them support these capital-intensive projects and maintain that aggressive growth without over-leveraging the parent company, KPI Green. It's a smart structure.
That makes a lot of sense. So with such ambitious plans, huge capital commitments, this leads us perfectly to how they're navigating the landscape, especially the operational strengths and, importantly, the key risks that come with operating at this scale. What are the big ones in renewables development?
Well, in any renewable project, especially in India, the major execution risks tend to be land availability and power evacuation, getting the power onto the grid.
Right. The bottlenecks.
Those are often the biggest headaches.
Yeah.
But what's critical here is how KPI Green seems to significantly mitigate these. They already have over 3 GW evacuation approval secured, and that massive land bank, over 6,000 acres. This isn't luck. It's built over decades of execution experience, they say, which has led to a stated 95-96% success rate in their projects.
95%. That's impressive. It really highlights how overcoming those traditional bottlenecks is a huge competitive advantage.
Absolutely. It's a moat. They even use a network operations center with IBM for real-time monitoring. Shows a real commitment to operational excellence.
Having those two major hurdles largely pre-cleared is a huge advantage. What about policy risks? Changes in government stance. Sources mentioned something about ISTS charges, interstate transmission system.
Yeah, that's a prime example of perhaps strategic positioning. The government did change its stance on the ISTS charges waiver. That was a significant policy shift. However, KPI Green is largely unaffected. Why? Because they primarily participate in state-level bidding under STU state transmission utility regulations. not ISDS projects.
Ah, so they strategically focused on state-level stuff, avoiding that specific central policy risk.
Seems that way. It reduces their exposure to certain central policy shifts. A clever way to de-risk the portfolio, perhaps intentionally, or just how their focus evolved.
That's really interesting. And I also saw mention of some project cost increases like INR 700 crore for a specific IP project. That sounds like a risk, but management said it wasn't an escalation.
Right. That's an important distinction they made. It wasn't like prices unexpectedly shot up. For instance, that INR 700 crore increase for one IP project. It was due to a strategic design change. They pivoted from a tracker-based design where panels followed the sun to a fixed setup, apparently because of the specific land characteristics.
Okay. So how does that work out better if it costs more?
Well, the change, while increasing the initial cost, actually allowed them to fit more panels onto the same land. So it boosts overall power output. And surprisingly, they said it even slightly improves their internal rate of return, the IRR.
Ah, more output means more revenue over the project life.
Exactly. And GUVNL, their buyer, was apparently fine with the increased output as long as it stayed within their specified PLF range plant load factor. So it's essentially a design upgrade enhancing long-term profitability, not an unexpected cost overrun. More like tweaking the blueprint to add value.
That's a really clever pivot then, turning a potential issue into a positive. What about other things like pledged shares or seasonality? Does the monsoon slow them down?
Okay, on the pledged shares, which can sometimes worry investors they've made good progress, the loan with SBI that required those pledges. Fully repaid, they got a verbal okay for the release, apparently, and expect formal board approval next quarter, so that should clear up that point.
Good news for governance watchers.
Yes. And regarding seasonality, the rainy season, Q2, typically, yes, it can impact execution, especially for solar projects. But KPI expects to manage this. They plan to focus more on supply, component procurement, logistics, that sort of thing during that period, and they aim to maintain execution levels pretty consistent with previous years. They've built that seasonality into their planning, it seems.
And how are they managing their balance sheet with all this capex, all this investment must put pressure on debt?
That's a critical point always for growing companies. Despite the ongoing capital expenditure, KPI Green maintains a healthy debt-to-equity ratio. Currently, it's at a very low 0.5 to 1.
Oh, that is low for this sector.
It is, and they expect it to remain comfortably below 2 to 1, which is quite conservative. Furthermore, because of their strong profitability and cash generation, they project no need for equity dilution from the promoters in the next couple of years.
That's incredibly reassuring, shows a real handle on their growth without overstretching. I also noticed a mention of internal tech, like solar panel robot cleaning facilities. Is that something they might sell eventually?
Right now, those robot cleaning facilities are primarily for internal use.
Yep.
Makes sense, right? They have a huge portfolio to keep clean, 5.9 GDG executed and upcoming. It boosts their own operational efficiency, keeps generation high. While it's internal now, management hasn't ruled out future commercialization, maybe offering O&M services or even selling the tech itself. It's a nice potential future revenue stream, shows innovation.
Interesting side venture potential. And finally, what about supply chain risks? Especially for panels, we've seen global volatility there.
Another good example of their foresight, actually. They've already hedged 1.7 GW of panels at current rates, locking in prices. And crucially, they mentioned they exclusively use Indian manufacturers for their panels.
Domestic sourcing.
Exactly. That dual strategy hedging plus domestic sourcing significantly de-risks their supply chain, protects them from international price swings and potential global disruptions, a robust national first approach.
Okay, so to recap our deep dive into KPI Green Energy, we've looked at a company showing consistently strong financials, really driven by disciplined execution and smart capital allocation. They've got incredibly ambitious growth plans that 10 GW target, fueled by large-scale strategic projects and key alliances, especially in emerging areas like battery energy storage. And importantly, they seem to have a robust, proactive approach to mitigating those key industry risks: land, evacuation, policy shifts, supply chain. They're clearly positioning themselves as a very significant player in India's renewable energy landscape.
Indeed. They're not just chasing megawatts, they seem to be strategically building capabilities and a diversified portfolio that aligns really well with the broader energy transition, proving perhaps that sustainable growth can indeed be very profitable.
So as India continues its aggressive push towards a sustainable energy future, and companies like KPI Green Energy are building not just power plants, but entire ecosystems of clean energy, here's something to think about. What aspects of this ongoing energy transition will most profoundly impact your daily life in the coming years?